You are tuned to ARP on the Accelerated Radio Network. It's 12 noon, and it's time to have lunch. Lunch with the Finance Bunch. Lunch with the Finance Bunch. Lunch with the Finance Bunch. Bringing money talk you can understand. And now here's your host, Miss Charlene.
Definitely the person you want to know. Mr. Mardi Kari is the owner of Arcstone Financial, a mortgage company that's been in existence for how long now, Marty?
Well, we've been in existence since 2000. 2000.
Wow, so you've been in existence for 15 years. That's
Correct.
Great.
It's tough to go through these times and be in business still, but
I'm impressed because, we went through that economic downturn in 2007, 8, 9, 10, 11, and 12.
Oh, yeah.
Right?
Absolutely.
And the company survived.
Absolutely.
Absolutely.
We actually had some of our best years when the economy turned, just because we've always done a very referral-based type of environment where everybody knew us as doing good to our clients. And I have this tendency to say members because my background is from the credit union world. So, but our clients are just basically coming back to us because we've always taken care of them. And in 2008, when things turned around, and a lot of the companies that did not do well with their clients at the time were losing their homes, our clients were always coming back to us just to make sure, because we've always taken care of them.
Wow. Well, for you to say members, that means you treat them as if they're family. And
Absolutely.
So I think they get that feeling from you, and that's why they stick with you.
Absolutely. And it's fostered throughout our organization. Even our loan officers, it's how your mentality or your environment is created within the organization, and that's rolls down to your salespeople as well. In this case, our loan officers always treat that they see that that's how we treat our clients, yes. And they want to give that same treatment back to their own newer clients essentially as well too.
Well, it seems like it goes a little further than that, because even your operational staff is very supportive of your loan staff. And I know that because I'm a loan officer in your office. And what I love about that office is that the back office is so helpful. And, they make sure that they do everything possible to service their clients, which is the loan officers, and the loan officer's client, which is the borrower, to the best of their ability in a very, very fast way. So I love that. They're professional, knowledgeable, and they move things quickly.
Absolutely. I mean, when we have people working at Arcstone Financial in the operational side of things, they recognize that they have two clients. One is the loan officer, and the other one is going to be the client itself. Just because the loan officer is obviously reliant on the operational staff to do what they need to do, to make sure that the borrower gets the loan. So it's, they recognize there's two individuals that they have to deal with as far as the client at the end of the day. But, we just had a recent incident, and there was an issue in the office which would have probably caused, to forget that the loan officer is not the center of our end goal, and it's always the client.
Absolutely.
Yeah. So you can't focus on the loan officer's only needs, but you got to also keep in mind the borrower's needs. And at the end of the day, that's who we're servicing.
Absolutely. I agree with that 100%. Now, here's a question I have for you, too. When I said we were going to do this show, I started reaching out to people and saying that you were going to be on the show. And so we got a lot of questions from people. Why, is this a good time to buy a home? Are interest rates low right now? What is all this buzz about interest rates being really low? So it was a perfect time to have you on so that we can address some of those questions. So right now, one of the biggest questions they want to know is are they in a position to buy a home? And it's such a broad question, but how do you answer that?
Yeah.
Are interest rates low?
Absolutely. They've definitely come down, and the bond market's dropping, and so therefore, and when we say bond markets, that has a direct implication to the 30-year Fannie Mae rates as well.
Uh-huh.
And so we're definitely talking about rates that are in the threes at the moment, and that just basically allows people to afford more. And or if they weren't able to afford a home before, it allows them to afford it now, just because their payments will be lower based on a lower interest rate.
Exactly. And speaking of lower interest rates, we're also, FHA has done something recently that is really good also. And what was that?
And recently, FHA just basically to increase homeownership and the ability for people to be able to buy homes without having excessive mortgage insurance, they dropped the mortgage insurance, monthly mortgage insurance premiums. And previously it was at a rate of 1.35. And, when I say 1.35, that was the worst case scenario.
Right.
It does get better if you put more money down and things of that nature. Mm-hmm. But now it dropped down by half of a percentage point. So equivocally, if it was 1.35, it would be 0.850%, basically.
So that's like,
that could be a significant savings on a monthly basis. It could,
exactly.
On a $200,000-$300,000 purchase, it could equate to being anywhere from $150 to $300 a month savings, basically. So
wow. So this is a good time to buy.
Absolutely. I mean, the reason why I think it's a good time to buy as well is that, the interest rates are, low. They're not all-time low, but they're really, really close to being all-time low again. Mm-hmm. And, we've got a market that's rising. Values are increasing, and a lot of times people's homes and or real estate purchases are the biggest investments that they buy. And how do you save $100,000, $200,000, $300,000? It's really, really hard for a working individual to be able to save that much money because of life expenses, basically. So when values are increasing, that's the fastest way to build equity and create wealth for people. And so now if you're buying a home for $300,000, $400,000 or maybe more per se, now if the values increase by $100,000, $150,000, I mean, that's a big deal. That's a great thing. I mean, for families, I mean, you could maybe sell that property down the line and move on to something else, or you maybe sell the property and completely relocate somewhere else and take that $150,000. And everybody should talk to their tax accountants.
Yes.
It's a great time right now just because, all of these taxes are due by April. And one of the questions should be is, can I afford a home? And should, what are the... can I get the afford of the home is not a question to a tax accountant, obviously, because they're not going to know how to qualify you, but they're going to know that there's tax benefits, and they're going to explain to your specific situation how much tax benefits you would have by buying a home. Whereas, let's say in Southern California, somebody's making $80,000 to $100,000 as a W-2 employee, they might be paying, approximately 35 to 40% of their income towards their taxes.
Right.
And so this could be something that would help as far as buying a home, essentially. So, but as far as like the purchase prices, I mean, the prices go, I definitely see the market trending up, whether it be Los Angeles, whether it be in other counties nearby, or, I mean, in other parts of the country as well, too. I mean, it's definitely increasing.
Absolutely. Great answer. Also, another question that we asked, and you and I talked about this a little bit ahead of time, and it was, how do I qualify for a purchase? That was a next question that someone asked, and people are really concerned about a couple of things. How much money they make, their credit, and they're not necessarily always in the best position to make those kind of judgments on their own. So they need a professional involved, right? And so when someone says, am I qualified to purchase a loan, kind of take us through that process. What do they need to do?
Sure, absolutely. First of all, anybody that's dealing with their finances and things of that nature, it's almost like going to a dentist. Most people try to avoid that as much as possible.
Yes.
So it's not overwhelming. I mean, since the regulations have changed since 2008 and on forward, we've definitely required more documentation from the buyers or borrowers in this case. And it could be a little overwhelming. So things of the nature are going to be, collect your income tax documentation, such as right at this point in time, a lot of people are starting to file their 2014 taxes. Right. So generally, a lender needs 2 years of your taxes. So for 2013 and 2014, and if you haven't filed your 2014 taxes, they're going to need it for your 2012 and 2013 taxes. So, and that's to basically make sure that your income's stable, and that's what we're trying to look for. And this is also to validate what income was filed. Somewhat some people think that they make more money than what that we truly do on taxes, and therefore, after write-offs and after deductions, things of that nature is what a lender utilizes. So for in a self-employed situation, if somebody is working for themselves, they are going to have a lot of write-offs. They're going to have expenses to run their business. So often you talk to a business owner and they'll say, "Oh, I made $150,000 this last year," but then you look at their taxes and they'll say it'll reflect that they wrote off half of that, basically.
Right.
So maybe they really truly made $75,000. So what we're looking for is your effective income, and when you provide that tax documentation to a loan officer, such as yourself, Charlene,
Right.
You would be basically providing us with what your true income is,
That's
and that
right.
true income is validated with the IRS, and that's the only reason is because pre-2008 there was a lot of unscrupulous practices going on
Yes.
with taxes. So therefore, everything that's provided to any federally insured and or lender per se, you're going to have to, it'll be validated by third-party resources. In this case, it would be the IRS. So once you provide your taxes, your pay stubs, your W-2s, a loan officer is able to calculate your income and figure out what you can afford. There will be other items that will be needed to provide, such as your capacity. Well, how much money do you have down, and are you going to be able to put money down? Is somebody going to gift you the money? These are questions a loan officer will ask. But the biggest and the hardest piece of the whole puzzle is the income piece. Is
Right.
People really get scared, and there's a little bit of embarrassment and or fear of giving the information to a person per se, and they might be worried about person identity theft and things of that nature. So you really want to research the companies that you work with. Arxstone Financial in this case has everything secured, is in compliance with a lot of the guidelines as far as making sure the information is all within our own organization, is not able to be shared, and or so these are things that an organization that's audited and or compliant will have to be abiding by. And these are things you want to look for when you're working with the loan officer as well too. But overall, the income documentation is probably the biggest thing. Anything I'm missing from your experience, Charlene?
No, but I did want to give, in listening to you, what kept popping into my head was a disclaimer. For anyone who's planning on purchasing a home, please don't buy anything else. Please.
Absolutely.
Don't buy a car. Don't run out and buy furniture. Don't open up new lines of credit. Don't start transferring money all over the place, right?
Absolutely.
Don't go to your credit card and take out cash from your credit card and put it in your savings account. Don't do anything. Just stop. You've decided you want to purchase a home. Let us pre-qualify you. Don't move any money. Don't buy anything. Don't open any new lines of credit. And let us do our job. Because in some cases, what people will do is they'll start getting creative. And they will ask questions to themselves, not to us. Mm-hmm. And then they start figuring it out on their own. And then when they bring you the paperwork, then you start asking questions. And they go, oh, by the way, I thought I needed to. And then you get the true story. Mm-hmm. So please, when you decide you want to buy a home, or even before you decide that you think you're qualified to buy a home, talk to a professional like myself, like Marty, and we'll guide you through the process. Don't get creative on your own, Mm-hmm. So that was what was running through my mind when you were giving the do's mm-hmm. of it. I wanted to give the don'ts.
Exactly.
Don't do anything that's going to turn it into a nightmare, right?
Mm-hmm. Mm-hmm.
So because it's all about making sure that we can paper trail, mm-hmm. Everything that you do, mm-hmm. So the process I don't necessarily think is hard. It's just that it becomes more complicated when people try to get creative or they start doing things that's not a part of their normal pattern.
Absolutely. And just for the listeners, there's laws that, require us to do these checks, anti-money laundering laws and the Patriot Act, things of that nature that are in place that require us to check and double check this information, because we just don't want to, basically break any laws in the process of it as well too. And it's also looking out for your best interest.
Exactly. You don't want to be house rich and life poor. You want to make sure you purchase something that is really within your realm of being able to afford it.
Correct. And that's what that's a great point, Charlene, just because speaking with a loan officer, it might be a daunting task, or you don't know this person. Who is this person? Why are you going to share a lot of this information with them? It's really important that you do and you like the person they work with,
right?
Because this person has to really guide you and give their experience to you as well, and tell you everything. Then you might tell them, we're planning on having a baby down the line. And so that triggers something for us to basically advise you on. We'll say, well, the baby costs money.
Right.
There's diapers and things. And, these are things. Are you going to plan on staying in this property? It's a 1-bedroom. If we hear things like this and we say, well, maybe this is not your lifelong property that you're going to stay. So therefore, a loan officer might offer you a different program. And so it's important to share your future goals with them as well, too, just because you might say, hey, I'm staying at this job for another 6 months and I'm going to buy this house, but I have this dream of starting up my own IT company.
Right.
Well, see, these are things that you're going to want to listen to and say, this is a good point that you bring up, and we want to make sure that you're actually advised properly. So it's not just a numbers thing. It's also about listening to the individual and what they're throwing out there as well, just because we want to make sure that their dreams are attained as well, too, and not, the house does not make them just,
they become like house rich and life poor.
Exactly.
And the only thing they can do is stay at home and look at each other.
Exactly.
Right?
Exactly. So you got to have fun.
Yeah, and and it's no fun when you can't afford to do anything else. Mm-hmm. So you should speak to a professional who can help guide you and not necessarily deter you from what you want to do, but explain to you what's going to happen down the road by the choices that you make.
Mm-hmm. Absolutely.
Right.
I mean, there's often times where you have a conversation with a borrower and you say, listen, this might not be the best time, really. You could certainly do it, but this is my advice to you. So, and that they need to hear that sometimes. So just because there's a lot of pressures that might be from the outside.
That's right.
That might tell them that they can buy or not buy. And the same with the opposite. They might be told that they cannot buy, and then all of a sudden you look at their income and their documentation, you wonder why they haven't bought so far. Mm-hmm. So there's a lot of those things where speak with an individual that's been in the business for a while that can actually give you their lifelong experiences as well too, not just numeric numbers.
Exactly. Another question that came up. Is there, during the purchasing process, they're saying, when should I come to a loan officer? And I think it's at the beginning. When you first start, to think that you want to purchase a home, come then. Because even if you're not ready, we can help guide you so that you are prepared. Mm-hmm. For that future purpose. So you might think, okay, I'm 6 months to a year away from being able to purchase a home, and you may be 6 months to a year away from being able to purchase a home. But if you come to a qualified lender who can pre-qualify you, tell you where your strengths and your challenges are, and help guide you towards that purchase. And they can also, tell you things like save more money. Maybe you shouldn't, spend as much money as you're spending on entertainment or whatever you're doing, and lower your credit card bills or whatever it is that may challenge you from being able to purchase that home.
That's a great point, Charlene, just because a lot of times credit is the biggest deterrent to people. And so when you speak with an individual that can guide you and run a credit report, and please know that there's this misconception that, when your credit is run, your scores are dropping, things of that nature. Speak with your loan officer and they'll explain to you what the parameters of that is, but running your credit report does not necessarily drop your credit scores down.
That's right.
And so just pulling a credit report, you get a good understanding of what you have to work towards. And that might take 6 months to a year. If there's challenges, or it might take even longer, or it might be a simple solution of just paying down a credit card. So these are the things that a loan officer can guide you towards. A lot of people are afraid of the credit scores, and it truly is a mystery sometimes, but we do have modules and systems in place where we could say, well, what if we pay down something?
Right.
What if we got rid of this debt? Will your scores go up? And those are things that you want to know and, work towards, basically. So.
Absolutely.
Yeah.
This is a great conversation. I have so many questions that I know people want me to ask. And so I feel like I want to specifically address the questions and answer them so they understand, But I also have so many questions I want to hurry up and get them all out, right?
Sure, absolutely.
So you're listening to Ms. Charlene, and this is Lunch with the Finance Bunch. Welcome to Accelerated Radio Praise, where you're listening to 24-hour gospel music and talk. To call us, you would dial 323-238-0445 with any questions and comments you may have. And so, and this comes on every Friday at 12 o'clock noon, and we try to educate our listeners on the different aspects of finance. As being a loan officer, and you know this, Marty, you get to look at a person's complete financial portfolio.
Absolutely.
And so in having the privilege of being able to do that, you can see some of the areas that they may or may not be doing their best in. Mm-hmm. And so a part of this program I thought would be good to have, and not only to talk about mortgages and how you can obtain them, but also different aspects of their financial portfolio. I bring on experts who can help guide them through that too.
Absolutely.
So you're listening to Lunch with the Finance Bunch. I'm excited to have Mr. Mardi Kari in the office from Arcstone Financial. And Marty, would you like to give the listeners some more information about your company?
Sure. We are located in Los Angeles, specifically in the Los Feliz area, and Arcstone Financial, and our 800 number is 800-830-5626. And the local number is 323-665-5000. And feel free to reach out. Ms. Charlene works there as well, and she would be able to pre-qualify and help out any of the individuals for their purchases and or refinances.
Speaking of refinances, since the interest rates are coming down really low, there's been a surge in refinancing. And so, but there's still those people out there who are waiting for the market to get even lower. They're playing that proverbial how low will it go game, right?
Exactly.
And so what do you when you advise people, what do you tell them? Because I know what I say, mm-hmm. but what do you tell them?
Well, I mean, to me, it's just an analysis. So what we'll do is we'll look at a snapshot of what they're saving and what the cost of it is at that moment in time. I mean, you can never gauge the market. It's just never something that I advise anybody to do.
Right.
Markets go up, markets go down, but things are going to be at that moment in time. Is it a good time for you to refinance? For example, right now, a lot of people call and they say, "Oh, I've told my dad told me if my interest rate dropped by 1%, I should refinance. But if it's less than that, I shouldn't do it." Well, that's really not a good gauge to do. My advice to anybody is, okay, well, let's look at your current payment, and let's look at what your new payments are going to be, and let's figure out what that difference is. If it's $100 and it's going to cost you $10,000 to refinance, then absolutely makes no sense.
Right.
And by the way, no refinance costs $10,000.
No.
Just so you know, I'm just giving an example.
Right.
But if you're saving $100 mm-hmm. and it's also costing you $1,000 to refinance, that break-even point is you take your $100 savings or that $1,000 cost and divide it by the $100 that you're saving, right. And you're going to basically be ahead in 10 months.
Right.
So once you divide that, and that 10-month number comes up, I would run and refinance right away.
Absolutely.
Because now I'm saving $100 every month further after that 10-month period.
Exactly.
And a general rule of thumb is if you recoup your expenses of a refinance, and often there's no cost to refinance as well too. But when there's no cost, there's no real question. I mean, I would refinance absolutely if they're saving money. It's just, that's your gauge. If you want to save $40 a month, you can do the $40 a month. If you want to save $300 a month, depending on what the actual savings are in your particular case, that's when you want to do the refinance, basically. So I encourage everybody to look at their current payment and do do an analysis of what the new rates, what their payments would be, and find out what the cost of a refinance would be, and whether it be zero or whether it be minor cost, essentially, and divide that with the amount of savings that you have, and and if it does, turn out to be 4 years or less, I would say absolutely run and refinance.
Absolutely. Thank you for that. Because that's what I tell them. And, go to a professional. You can come and see me, of course. I'm Miss Charlene, and I do mortgages also. And you can contact me, and I'll run the numbers for you. You can contact Marty. He'll run the numbers for you. But talk to a professional and let them help you make that decision. And don't just, sit and think, oh, well, the market will get lower, because we don't know.
Mm-hmm.
We don't know. The experts don't know. They guess. Mm-hmm. So, as a part of the guesstimate, you might want to get to find out, exactly how much you can save.
Now, one of the things, Charlene, I want to say is that's not in the guessing game, is when FHA dropped their mortgage insurance premiums.
Yes. Let's talk about that.
So that's really not a guessing game. That dropped, and that became effective as of January 26th of 2015.
Yes.
And anybody that has the higher mortgage insurance rate, which was, as of 2012, it was pretty high to start off with.
Mm-hmm.
So anybody that got an FHA loan in 2012 and onward, they can refinance with no cost. It's called a FHA Streamline. And you could refinance without any cost and reduce your payments right away.
Exactly. That's a good point. So anyone who has an FHA mortgage that they got that loan between 2012.
I want to say April of 2012.
Right. Between April of 2012 and really up until January 25th, check with, us. And we can do a streamline refinance for you so that it brings the cost of that mortgage insurance down. And there's a significant savings there.
It's very rewarding when you can see somebody when they call you and they didn't know about this. And when you just look at their numbers and you go, wow, you could save $300 a month for doing nothing. And the requirements are significantly different than what we described earlier. Mm-hmm. The streamline process is just no documentation hardly at all.
Exactly.
Because we are, the Federal Housing Administration and your previous lender already analyzed your income, assets, credit. So therefore, as long as you've made your payments on a timely basis for the last 12 months, you can qualify for a Streamline.
Yes, that's right. I have a client that's saving $300 a month.
And that's so rewarding,
That's a
right?
no-brainer. Yeah. Absolutely.
I love those stories.
Yeah. So I'm glad you brought that up. And another question that I got was, are there any new loan programs out there? Now, that's a huge question. That's a question. I said, well, there are no really new programs out there, but there is the revitalization of some old programs. Mm-hmm. So what are some of the new programs or the revitalized programs that you would you can talk about?
Well,
Give an example.
For example, Fannie Mae and Freddie Mac are the two largest purchasers of mortgages.
Right.
In the mortgage industry. Mm-hmm. So, but what happens is in 2014, qualified mortgage laws came out, and that was part of the Dodd-Frank Act that was released in 2010. And it basically said that everybody has to be qualified with their income, but it made it where it was very restrictive, and a lot of lenders were scared to do anything other than just qualifying them with their W-2s, tax returns. But now the new programs that are coming out are analyzing someone's cash flow. So for a self-employed individual that has a business, they might be depositing $20,000 to $25,000 a month into their checking account, but that might not be, at the end of the day, what they take home. So there's programs that we call 12-month bank statement or 24-month bank statement programs that will basically analyze the deposits to calculate the person's income. That's one of the I believe in that program just because that's a very good look at what this person brings in.
Exactly.
And I think it's not a risky loan personally, because it takes me back to when I started in the industry, is you look at the big picture of the individual versus just a W-2 and a pay stub.
Exactly.
And so that's one of the biggest programs that I personally endorse and like for self-employed individuals, because I believe that the self-employed individual is very entrepreneurial. They're going to make it regardless. And so therefore I believe in that product. Other programs that are out there that are trying to make their way out is for foreign nationals, for example.
Yes, that's a good program also.
Yeah, so people that are coming from out of the country buying into into United States, they traditionally cannot get financing, and now there are possibilities of financing for them if they put enough equity into the property.
Right.
So those are the two main ones that I would probably think about and endorse. There's probably multiple different other programs out there. Things of like for wealthy individuals, there are asset depletion. Yeah. So I mean, for example, I just met with an individual recently who said they were inheriting a significant amount of money, but their income is very minute. And so what we did was we took their significant amount of money and amortized it over a 10-year period and utilized that as income for them. So there are other avenues. So do not think that W-2 tax returns and or the traditional way of checking your income is the only way. There are other programs out there.
Absolutely. So. Wow, this is great information. So grab your pens. I usually tell my audience, grab your pen and write the information down. And what I mean by information is the contact phone number that we want you to use when you call us. You can call area code 323-284-6051, and you will get my voicemail, and I will definitely give you a call back, and we can talk about qualifying you to purchase a home, or qualifying you to refinance a home, or doing a streamline refinance, or we can explore some of the other programs that are available that Marty just mentioned, because there is a lot more available now than there was over the last few years, just based on the market taking a downturn, and then us coming back and things being a little bit more stable now than they have been.
Absolutely. And the reason why Charlene works at our organization is because we have a lot of programs.
Absolutely. And you guys treat me really good too. Absolutely. I always tell you this, between the back office and the management office, it's a great place to work.
Absolutely. And so,
absolutely.